Every money headline this week was doing jazz hands. Inflation whispered, mortgage rates shuffled, energy bills tried a plot twist, and student loans said, "Surprise, I'm complicated. Take a breath." I'm translating the noise into moves you can actually use. No PhD, no panic, no 12-shot espresso. Here's the plan. We'll start in the US, what the macro mood means for borrowing, how to think about mortgage quotes this week, and a simple student loan checkup. Then we'll cross to the UK, where the Bank of England finally blinked, fixed mortgage deals are inching, and the energy price cap has a less scary update. Stick around to the end for 3 fast money moves for each country you can do in under 20 minutes. Let's start with the United States. The macro, in plain English, prices are still rising, but they're no longer sprinting. Think, fast walk with a side stitch. That cooling vibe gives the Fed some room to consider easing policy, carefully. No one's throwing a victory parade, but we're also not in last year's Everything Hurts chapter. Translation to normal life. The world is inching towards slightly easier borrowing, and risk assets are getting fewer side eyes from the grown-ups in the room. If you felt like money got heavier over the past 2 years, mortgages, credit cards, car loans, you're not wrong. Higher rates make dollars feel like they've joined a gym. The good news? We're closer to the part of the movie where the main character stops running uphill in flip-flops. The less good news, policy doesn't turn on a dime, and it rarely drops gift baskets at your front door overnight. So no confetti, but we can talk about practical ways to catch small tailwinds as conditions relax. Mortgage rates. Why a tenth? Still matters. Mortgage rates are like the weather app. One decimal place can decide whether you grab sunscreen or a jacket. Even a 0.1-0.20% swing can change what you qualify for or what you pay each month. Let's ground it with mini-math. Imagine a $400,000 30-year fixed mortgage. At 700%, the monthly principal and interest is about $2,761. At 680%, it's about $26. At 650%, about $25.28. That 0.50% improvement, 7.0, 6.5, is roughly $133 a month, which is someone's groceries, a phone bill, and a polite latte. Even a 0.20% float down, 6.8, 6.6, is about $53 a month. Small? Sure. But across 12 months, that's $636 staying in your budget. 3 quick plays while you shop rates. Refresh pre-approval every 30-45 days. Lenders can rerun numbers quickly. You want your offer power to reflect this week's decimals. Ask about a float-down option. If rates slip before you close, some lenders let you capture the drop once. Fees versus rate trade-off. A slightly higher rate with fewer junk fees can be cheaper over your expected hold period. Run a 5-year cost comparison, not just lowest rate wins. If you've ever haggled for $5 at a flea market, then shrugged at a $100 month difference on a mortgage, we're fixing that today. Student loans, the better-than-nothing update. New federal student loan rates for the upcoming academic year edged lower compared to last year. Not a ticker tape moment, but less interest is less interest. If you're borrowing for school, Federal First is still the default advice. Built-in borrower protections, deferment options, and income-driven repayment plans that private loans don't mimic one-for-one. For current borrowers, 2 quick checks. IDR audit. Log in, look at your income-driven plan, and confirm your recertification window. If your income changed, your payment might too. Down is a direction we like. Autopay nudge. Even $20-$50 extra toward principal monthly can chip away faster than you think. Mini-math. On $30,000 over 10 years, the monthly at 650% is around $341. At 625%, about $360. That $4 a month won't change your zip code, but on $60,000, it's about $8 a month. And with auto-pay discounts plus occasional windfalls, the compounding effect stacks. Student loans are like houseplants. Ignore them, and they get dramatic. Give them a schedule, and they usually behave. Budget reality check. The Paycheck Power audit macro moves are cool, but the fastest ROI is still your own budget. Try this 10-minute Paycheck Power audit. Subscriptions trim. Sort bank credit card statements by merchant. Kill the 3 you barely use. That's $20-$40 mo back. Insurance shop. If it's been 18-24 months, get fresh quotes. Bundles and telematics can be annoying and worth $200-$400 a year. Groceries rule of 3. Always enter with exactly 3 planned meals for the week. Fewer impulse aisles, less waste. Add those up, and you found the equivalent of a 0.20% rate cut inside your own life, today. And what is happening at the UK? The Bank of England finally blinks. The BOE trimmed the bank rate recently. Small step, big symbolism. Translation: the inflation fight is calming enough that the central bank can loosen its jaw a little. If you're rolling off a fixed deal this year, this matters. Lenders often respond with small tweaks to new fixed-rate products as funding costs ease. It's the financial equivalent of a British nod. Not a hug, not a handshake, but definitely a nod. Mortgages, 2-year fixes edge lower. Headline vibe: average 2-year fixed deals have drifted toward the 5% area, give or take, and 5-year options are doing their "we're calm" impression as well. We're not back to 2021 fairyland, but we've walked away from post-mini-budget chaos. Mini math: 25-year term, $250,000. At 525%, monthly payment is about $1,498. At 500%, about $1,461. At 475%, about $1,925. That 0.50% shift, 5.25475, saves roughly 73 months, nearly $876 a year. That's winter heating, a rail pass, or your polite latte's British cousin. 3 moves if your fix ends in the next 9 months. Product transfer versus remortgage. Get both quotes. Retention deals can be shockingly competitive, or not. 6-month runway. Many lenders let you lock a new deal up to only 6 months early. If the market improves, some allow repricing before completion. Overpayment strategy. If your deal allows it, often 10% a year, tiny overpayments shave time and interest. Even 50-month makes a difference if you stick with it. Mortgages are less gotcha when you shop like a nerd and calendar like a pro. Energy bills. The price cap moves down. Ofgem's latest price cap review brought a drop for the current quarter. It's still above pre-crisis levels, but at least the direction finally cooperates. Remember, the cap limits unit rates and standing charges. It's not a cap on your personal bill. Your usage is the plot twist. Tiny audit, big winter impact, 15 minutes. Thermostat and amp, timers. Nudge schedules to match your real routine. No heating and empty home. Standby bandits, game consoles, old set-top boxes, and second fridges are sneaky. Insulation quick wins. Draft excluders for doors, windows. Letterbox brushes. Curtains that actually meet the floor. Low glamour, high ROI. Mini math. If your typical annual bill is £2,000, a 7% reduction is about £140 a year, roughly $12 a month. It won't buy a Rolls, but it will buy peace with your smart meter. Savings and amp, cash. Don't snooze on your APY. With the first rate trim in the books, easy access and fixed-term savings accounts are shuffling. 2 tips. Move the lazy cash. If your current account pays basically nothing, shift your 3 to 6 months emergency fund to an easy access account with a decent rate. Keep bill money in checking. Give cushion money a job. Ladder, don't guess. If you want a higher rate but worry about timing, split cash into a ladder. Some fixed for 6-12 months, some still liquid. You'll always have a tranche coming due, so you're never trapped. 6 quick money moves for both countries, time to land the plane. These take minutes, not months. US, pick any 2. Calendar macro plus micro. Add next big data release, your rent mortgage draft date, and your credit card statement date to the same calendar. Refi sniff test. If your 30-year starts with a 7 or 8 and you've got NG 20% equity, run a 5-minute refi estimate. Even if it's a not yet, you'll know. Student loan tune-up. Confirm your IDR plan, recert date, and autopay. Toss an extra $20 toward principal when you can. UK, pick any 2. Mortgage diary. Set 2 reminders if your fix ends in 3 to 9 months. 1 now to shop, 1 8 weeks before expiry to lock or reprice. Bills reality check. Compare your unit rates and standing charges to the cap. A competitive fixed tariff might be smarter for your usage. Savings ladder. Draft a 3-bucket cash plan. Easy access, 6-12-month fixed, and future fund sinking fund. Money is never about a single headline. It's about the system you run every week. Today's system, a fresh mortgage quote, 1 bill you actually reduce, and a calendar that saves you late fees automatically. If this helped, like the video so more people see it. Subscribe for weekly recaps. Before you bounce, head to personalfinancetime.com for this week's no-fluff money moves you can actually use.